Hello, everybody. I think I need to close. Yeah. Let's see how that works. A little bit. Yeah, it worked. Sweet. How is everybody? I have had a crazy 10 days. Most of you know, I guess, because most people that are on here, at least live, follow me on Twitter. But Maisie, my dog, last Sunday, so a week and a half ago, fell down in my backyard. We don't know how it happened. And I brought her into the emergency vet, and they had to give her anesthesia and try to relocate. She dislocated her hip, and they tried to put it back in the socket. I got her back on at 1 a.m. Monday morning. And that night, Monday night at like 11 or 12 p.m., she redislocated it again, which they thought was over a 50% chance of happening. She went into emergency surgery on Wednesday and was operated on. And for the last week, she has been with me in my office nearly 24 hours a day, getting better every day. But she has to be immobile for basically less than mobile for the next 2 weeks. So she gets her stitches out. And it's been awful, but she's doing much better. She was basically peeing the bed, peeing herself, pooping herself. And now she's back to going outside and being able to, she's allowed to go outside to go to the bathroom, and I bring her right back in. So, and then of course, Magnachip blew up. It's been a difficult week. But let's talk about stocks because there's a lot to get to. I want to apologize in advance. I have a bunch of new ideas, and for a couple of them, they've moved significantly from when I bought them. I still own them and haven't sold any of them, so I like them here at these levels. But I have fairly significant gains in a few of them. So let's start with Magnachip just to get it out of the way. Clearly disappointed that we're still sitting here with no deal, and extremely disappointed with the guidance that they put out for the September quarter. It basically says that there's no OLED business anymore. And there won't be any real business until the China plant ramps, hasn't even started yet, opened, and until they get some more supply for Samsung. I have no way to handicap what the odds are now of a deal. They're higher today than they were a week ago, because now you're at a place where, unfortunately, I think the board would take $19 or $20 a share, and holders are making that very clear to them that they would prefer that than stick around until the second half of 2023 to see business get back to where it once was. So the only real question then is LX willing and wanting to pay the $19 or $20 a share? And I don't have an answer for that. I do have pretty good confidence. I did a group meeting with the CEO yesterday, so I have a little bit more information, I guess, than we saw on the conference call. I have a lot of confidence that they will do a buyback, or they will utilize the buyback that they have in place. They have not done it yet. He made it clear that the board has to decide whether they want to do an ASR or they want to do a 10B plan. But as of yesterday morning, there was no active usage of that $37.5 million. So they're not involved in the volume you see today or yesterday. But I feel very confident that they will at least utilize that $37.5 million, which is 3 million shares today at these prices. And it's about 6.5% of the company. And it should provide a nice tailwind to the stock as it gets utilized. Now, the big question is, if they are in a process, and I don't know if they are anymore, but if they are in a process, they won't buy back any stock because they're in the middle of a process. So we won't know the answers to any of these questions unless they, if they PR an ASR, it's likely that the process is dead, or somehow legally they got permission to do that. I don't know how they would. And that's fine. That's fine. I don't think you'll see the stock go down on an ASR press release. I think the stock's pricing in the process being 95% dead. And I did nothing yesterday with it. My call spreads have been annihilated. They're almost worthless now. I did buy some stock today. It's a 40% position now, common, with, like I said, almost no call spreads. That's one of the smallest it's been in the last year. So, take it for what it is. It sounds huge and it is big, but at $12.50, they have like $6.50 a share in net cash, and their book value is $10. So I don't think if it's going to go down another 25% from here, I'll lose another 10% of my portfolio. So I'm comfortable with that. I'm more worried than anything that Interactive Brokers hikes the margin, but it's still a $550 million market cap. So they shouldn't do that, but they've been known to do this kind of stuff. I think that's all I got on Magnachip. I wish I can give you more color about whether I have confidence in the business, ramping, or when it's going to ramp. But ultimately, I don't. And I can't even begin to tell you what I think that their numbers will be in Q4, Q1, Q2, and so on. The only good news from that perspective is, they truly reset the bar with this guidance, right? There's no OLED business basically anymore. So, you shouldn't have any surprises in the next 6 months. Now, does the stock go up? I don't know. You're going to have the tailwind of the buyback, and, but LX just a coin toss at this point. 50-50 would be great, Fat Eddie. I'm not at 50% chance that LX buys Magnachip. But I think the reason the investment thesis today would be that you have a decent chance that they do buy them, and they pay $19 or $20 a share. And then your downside is pretty safe with the $10 book value, $6.50 a share in net cash. And, half their business is doing great. The power business is doing great. It's very profitable, but their cost structure, of course, can't hold up just the power business. So you have to believe that the China business is going to ramp. And I do believe that. I don't think he's lying about them signing this China deal last year, and with the fab going into production in Q4. I think all that's going to happen. So then you have to believe that, Samsung is not terminal, and that they will get allocation in the Korean fab for Samsung next year. And I have no way of knowing whether that will happen or not. He seems pretty confident about it. And if both those things happen, the stock will rebound and will go back up again, into next year. So it seems to me like a pretty good proposition at $12.50. If it was 15, 16, 17, I might pack my bags and go home. But it's not. It's $12.50. So from a risk reward standpoint, I think that it has a decent margin of safety at $12.50. That's probably enough on MX. I have a lot of stuff to cover. But I'll take any questions if you guys have any now or at the end. I'm just going to go down my list of stocks based on how big I am in them to talk about the ideas. So in this order, you should assume is my sizing. Blackstone Minerals, my next biggest position. Oh, actually, that's probably not true. My next biggest position, Delta adjusted, is NCR. It's a new idea. I don't think I talked about it on here yet. And but maybe I did. I just don't remember. And it's already moved a lot from where I bought it, but it's a pretty simple story here. They are in a process, and they are in an exclusive negotiations with a private equity firm to sell themselves. There's been no price publicly mentioned. There was an article in Deal Reporter last week that said they're trying to line up financing with direct lending to consummate the deal. Given what the stock market's done and the bond market, I feel rather good about them getting the financing for this LBO. The math all works out. And I think the price could be in the lower 40s versus the 34.75 is trading at today. There's ways to put on spreads like 36, 38 September or October that pay kind of even money, I think, to where you can set it up that way. Half my position is spreads and half of it is common. Break is probably in the upper 20s. It's likely they do something, though. If they don't sell to the private equity firm who's financing that there, I think they'll figure out a plan B. This is very different than KSS, as the board here is a willing seller. So it's not there's not a hostile situation. There's an activist on the board, and he's fully working on the process with the company. That could happen any week now. They said last week in the coming weeks, but that could happen any day, any week now. Twitter, I took off my hedge in that when it was 40. I have not rebought the common, but I still have all of my options delta adjusted. That's not my third biggest position. I just have that on the screen there. It's like a 10% or 9% position. I'm pretty bummed out that I took off the common at 39.20 because of the quarter, but what are you going to do? I made a lot of money on it there, and I'm going to make a lot of money and have made a lot of money on the options. I mean, I have huge call spreads in it. I don't want to spend too much time on Twitter because look, Elon Musk is going to end up owning Twitter. So whether or not they recut, which I think they will for $1 or $2, or not, you saw he sold his Tesla stock yesterday, or you saw he announced it yesterday, but he sold the last few days. I feel very good about Twitter, and I'll be riding that one to the end. BSM, like I mentioned, there was an insider buy in BSM for 50,000 shares, which by the CEO, he's very rich. But for him to make an insider buy is very odd, since he owns so much. And if anything, he should be a seller to diversify his holdings, not adding to it. I love BSM, and that's just kind of a long-term hold for me. I'm going to talk about AMPY too while I'm here. I added a lot to AMPY over the last 2 weeks. I think that's very, very timely. If you go back and you read the conference call for the last quarter, they make it seem that beta approval is imminent. The language they use to me seems that the market is not focusing on that catalyst. And I don't think the stock is pricing in really anything for beta. Maybe it's like 50 cents or $1 down in a kind of a knee-jerk reaction if the process gets elongated, but it's as much as $2 or even more up on a sign that they're going to have it approved to restart. And I think that could happen in the coming weeks. The language that management use, again, go back and read the conference call, is very specific. They even use the phrase very soon, and was specifically asked, is this a 2023 approval or a 2022 approval? And they made no uncertainty when they said they thought it was a 2022 approval. I don't think management has any incentive to overpromise and underdeliver here. If they thought that there was a hiccup in the process of getting re-permitted, I think they would be much more cautious. They don't gain anything from a public relations standpoint, and they don't gain anything from a shareholder standpoint by promising a timeline that isn't going to deliver. So that's my view there. I put on today a decent size pair trade, a spread in IS and U. If you recall, I had a small position in IS for the last few months. I never talked about it on here because it was just kind of like a broken SPAC, and I didn't really have much of a thesis, and I got destroyed in it. What's really interesting today is that IS has a competitor, which is AppLovin. I love the name of that company, ticker APP, and it's a much bigger company than IS. And AppLovin press released yesterday that they are have made an unsolicited offer to buy U. If they did that, of course, then the IS deal would be dead. And as a result, the spread blew out. And the spread is huge now. It's like 35% or 33% gross, which is insane. Now, the risk is that the Unity board of directors agrees that the AppLovin proposition is better than the IronSource proposition. But the real risk is that another company, a third company, comes in and offers a substantial cash premium for Unity. And as a result of that, the ironSource deal dies. So this could take a while to really analyze, but let's just go through them one by one. So if you go read the proxy for the UIS deal, you said they were in discussions with another public company for a few weeks in June and nothing aroused to it. Okay. App and IS are direct competitors. And you have to think that Unity would have examined an AppLovin deal side by side with an ironSource deal. And it's very likely that is the company in the proxy. Unity chose not to go forward with AppLovin. They went forward with ironSource. Okay. The reason why AppLovin went hostile yesterday, in my opinion, I think, and apparently this is what most ARBs think too, so it's not that of a stretch what I'm about to say, is it's kind of a Hail Mary play by them. If AppLovin went up a lot yesterday, then Unity would have went up a lot because it's a stock for stock swap deal. And that could have pressured the Unity board into examining and considering agreeing to merge with AppLovin and not ironSource. The opposite happened. AppLovin went down a lot and Unity had no premium from the previous day as a result of AppLovin going down so much. So the market test, if you will, that AppLovin was floating failed. And if you read the conference call of Unity yesterday, I watched him say this, the CEO of Unity. He's none too pleased about this offer. His body language did it all. He basically said he'll have no comment at all about the Unity offer. And then went into talking, for a long time about how much he loves the ironSource deal. Most importantly, 25% of Unity shareholders are committed contractually, I think it might be more than that, to vote for the ironSource deal. But they also, the two largest holders of Unity, participated in a convertible debt deal that's $1 billion that now is looking very attractive where Unity is trading. And that only goes through if the ironSource deal goes through. So they have a specific incentive to want to continue with the ironSource deal versus do an alternative deal. So I believe in the coming days, this is what always happens in the situation. You don't reject it immediately. You reject it a few days after the board can examine it. They'll reject it. My friend doesn't think the spread is going to move at all when they reject it. I think it will. And then I'll decide what I want to do with the spread, if I want to leave the spread on or not. But my intuition is the odds of a third party coming in and offering a huge cash premium to Unity is extremely low. There's also a chance that they want the ironSource deal to go through and they'll pay the cash premium. But I think both of those things are very, very low. So for that kind of spread of the 35% or 33% gross is huge. Now your risk, of course, is if the Unity cash buyer comes in and pays $80 a share and ironSource goes to $3 on a break, you get crushed both ways and you lose a lot of money. So that's the problem. Let's talk Peloton, which again, I bought way back in like $9, $9.50. And it's 12 now, but I still think it's timely. The problem with Peloton is the street's still too high on numbers for next quarter and next year, but I don't think anybody cares about that. What's interesting about Peloton to me is that if you go back to May, when they raised the $750 million from Goldman Sachs, just 3 days earlier, there was an article in the FT and in the Wall Street Journal, or Bloomberg, I think in the Wall Street Journal, that they're trying to sell a 20% minority stake in the company. And they were in early stages. Okay. And it got me rereading the transcripts of back in February when the new CEO got hired. And I think some people might have some revisionist history with how that all went down. But the new CEO got hired about 4 or 5 days after the FT and the Wall Street Journal reported that Nike and Amazon were looking into acquiring the company. When the new CEO was hired, he immediately came out and said that it's not for sale and that he wouldn't have moved his family across country if they were going to sell the company so soon. Reminder, there's super voting stock here. So all you have to do is ask the two guys that are in charge of the vote whether or not they want to sell the company at this price, and they can tell them yes or no. So I think the market assumed, because we never got a deal with Amazon or Nike, that those companies were never interested in Peloton. But my view is that they were signaled that the company was not for sale at that time, and there was nothing to pursue when you have super voting stock. If you fast forward to May, when they said they're looking to sell a 20% stake and they're in the early stages, I don't see any reason why the same people that were looking to acquire Peloton, whether a strategic Nike or Amazon or a private equity firm, wouldn't really love the idea of purchasing 20% of the company. The stock was trading at 30 in February and is trading at 12 now. And the key to Peloton is that the underlying recurring subscription business spits out like $1.4 billion a year in revenues with like a 65% gross margin. They hiked prices in June. The market's very scared about what the churn's going to be when they report the end of August. I think it's going to be minimal. And even if it is upticked, that won't be sustainable, right? Because it'll be kind of a reset of people that quit over the higher price. And then it goes back to the 1% churn that was there before. All you need for Peloton to work as a business model is to go back to them selling the bikes and the treadmills and the rowers at the much lower rate they were selling them at before the pandemic. It's very intuitive that they brought forward and pulled forward a huge amount of demand in the last 2 years. And it could even take a year or two to get back to where that demand normalizes. But that doesn't mean the business is worthless and that there's no people out there, again, that would want to purchase any of their equipment. So the opportunity to me is that once the market sees the cash flow break even, which should happen really soon after the terrible cash flow burn they had last quarter, when they can look past the burn and see the very strong subscription business, plus, you know, the sales ramping again in the bike and the treadmill and the rower, you're going to have the stock explode, whether it doubles or triples or whatever, because you have a good business. The underlying business is solid, and they have the cash to get there when they raise the $750 million debt deal. So my true catalyst is they announce a stake, they sell a stake in it for 20% of it. Hopefully it's at a premium to the current price, which I think it would be if it's a competitive process. And the stock surges. I mean, can you imagine if Amazon buys 20% of Peloton or Apple? It would surge. It could double overnight. So I own a ton of spreads in this every month, basically, like September, October, December, Jan 23 and Jan 24. All the earlier ones are like 12.16, 12.15, 11.14. They're not going to capture a doubling. They're going to capture a nice strong move like we've been seeing with the market or with them reporting decent numbers relative to what I think expectations are, not what the street's at. And then at Jan 24, I go out to like a $20 top, like 12.50, 20 spreads, which again isn't going to capture a tripling. But I own common too. So that'll be how I get the upside there. I think that's it with Peloton. This guy that came in, the new CEO, is very impressive. He's a CFO by trade. He's in his upper 60s. There's no way he's there to run this for years, right? I believe the game plan was for him to do exactly what I'm saying, which is get the business in good shape to then package it for a complete sale. And that might take 2 years, 18 months, whatever. It was definitely not in that condition in February. And I do think that the two guys that are super voting members are very aligned with us. They own millions and millions of shares, and it's a material part of the founder's net worth still. So I do not think he's just going to run it into the ground, especially if he could find a good home for it with a nice strategic company. The next new idea is Lionsgate, LGF. I bought that last week. That's very simple as well. They have two divisions, studio division and stars. And they announced back in November of 2021 they were going to seek strategic alternatives for the Stars, and that has been very slow in movement. In the conference call last week, which you should read, they insinuate, or they actually state, that they now have interest in both the studio and in Stars. And the general language to me is very bullish in the way they're talking about this transaction, especially referencing the MGM sale that Amazon bought. They have never done that before in a previous conference call. And if they get anything remotely like that kind of valuation for the studio, if it's either selling a stake or selling the whole thing, the stock would go up significantly, 50% or more. So that catalyst is in September. They say they should have an announcement by September. I think your downside is limited there, and I think you have, kind of like a 20 to 50% pop in the right transaction that happens there. There's not that many assets like this left to purchase, right? The studio's got some great assets, and it really shouldn't, of course, be public. It should either be a private equity-owned company, or it should be part of a much larger strategic company like a Netflix or an Apple to own that IP and to put out some new movies from that IP. MYOV, the major amendment came through again. They got approved. I'm big in spreads there. I believe that there's a decent chance Pfizer buys them in the next 4 months. I think that the parent company of MYOV needs the cash. There's no reason for it to be public. I know I say this about every company I own, but truly this is like a 50-50 joint venture with Pfizer, and all the costs are being shared, and it's probably just a matter of price. If they can agree on price, they will take it out. I don't know how much upside's there. Maybe they pay 25, 23, 27. I don't know. It's really just up to the Japanese parent what they're willing to sell for. QURE, QURE. I bought that on the blow up on Monday. They had a safety signal with their high dose Huntington's drug, and they are pausing dosing there. And the stock went down 30 or 25%. I think it's wildly overreacted. First of all, the low dose is fully enrolled and it showed no safety signal. Second of all, the high dose already had 14 people enrolled and only had 5 left to be enrolled. And all the safety signals came in the first few weeks of the procedure, and now they're all fine. So all of them resolved themselves, the 3 that had the serious adverse effects that had to go to the hospital for them. The other major point is that Huntington's is a god-awful disease, and depending on how well this drug proves to work, whether it's the low dose or the high dose, people are willing to deal with a significant adverse effect if it would significantly reduce the disease's natural history, natural progression. But the low dose might work anyway, and that hasn't had any safety signals. So for it to go down 25 to 30% to me is crazy. I think you could definitely possibly see them redose after they do the safety check in September, but they might decide they don't even want to because they have enough data, enough patients already dosed at the high dose to see the efficacy signal next year when it reads out in Q2. And then the other thing with QURE is you're waiting, of course, on the hemophilia B approvals. The EU went from accelerated to standard review, and people were freaked out a little bit about that. The company was adamant that that was just a result of bandwidth issues at the EU, and that there was no single data point that made them concerned to prolongate the review. I believe them, and I made that a decent sized position. KSS. Look, what's happening with the credit markets and what's happening with the stock market could not be more bullish for Kohl's. I don't own any comment in it. I still have Jan 23 and Jan 24 40-45 call spreads. They're pretty significant, so I'd make a bunch of money if that paid off. You keep an equity market going like this, you'll get a sale there at $45, $50, because the math works with the sale leaseback. So I don't know if it'll happen, but every day you see a market like this, it just makes it more and more likely that Kohl's can figure out a way to get to the finish line, either with FRG or with another buyer. Immunovant, IMVT. I own a lot of call spreads there. I prefer common there, but it's just very highly marginable. It's now been a full year since the blow up when they opted to take a stake from Rovent, added cash infusion versus sell the company. I think that that's the signal you needed to get a full year out from that before Rovent can then consider consolidating it again. Remind you, the stock was, 10 when it blew up last time and went to now 5. So I believe Rovent can pay 8, 9, 10, 11, 12 for it in a cash and stock deal. And I think it happens before the end of 2023, but I think it could happen as recently as soon as the next 3 or 4 months. And, I don't see much at risk there, though the last time they started dosing this drug, they had to halt the dosing because of the cholesterol issues. So you always have those risks, of course, once the dosing starts, and the dosing is starting or restarting. But they've tested this in a lot of patients across a lot of indications. So to me, I think the odds of another signal popping up that requires them to halt the studies is low. Oh, I never took my SHLX victory lap. That one was absolutely a huge position of mine. I think it was near 100%, 90% the day the deal got announced. That helped offset a lot of my losses elsewhere. I've actually had a pretty good month because I made a lot of money in all those other names while losing in a magnet chip. But I'm up pretty significantly from my lows. I think I'm up 50% from my June lows. And that's with magnet chip at 1250. So I'm still down 25% for the year. So let's not get too crazy. But one day at a time, one day at a time. I think I covered everything. I went very quickly through everything, which is amazing. It's only 32 minutes in. ARDX, we have the AdCom in November. I'm long a lot of spreads there. Forget for margin reasons. That's back to 90 cents. You can go look at a previous YouTube to I talked about that. But basically, I think that AdCom is going to be successful, and that stock has big upside if the AdCom votes for approval there. All right. I can't believe I did all that in 33 minutes. CLMT. I think I have a friend that owns that. I could check it out. Thank you, Fat Eddie. Anybody else? Happy to take any questions on any of the stocks. Magnet chip, any of the new ones I named today. I just gave you kind of high-level stuff here with it. Oh, BMYRT. Sure. So I think I did a YouTube on that since the court hearing, but maybe I didn't. We'll just have to see what happens there. There'll be nothing in the next 6 months or 9 months. They have to do some discovery first before they go into settlement discussions. They don't have to update the court until next year in October or November. You have to think that the longer it goes, the higher the settlement price is going to get, and BMY has to know that. So, we'll see. We'll see. That's such a huge position of mine. It'll be truly ironic if BMYRT ends up bailing me out one day. But at current prices, BMYRT is trading like $1.90 in the gray market. $1.80, $1.90, $2. It's that high. At those prices, I have on It's like if you use my current portfolio, if you put in the denominator and you put in the numerator on what my current portfolio is, it's a 35% position, BMYRT, using it in the numerator and the denominator at $2. So this is a big deal for me, right? If this gets settled at 3, 4, 5, it's a big win for me. And I would think you would not have a settlement anything south of $3. I mean, the people that are involved in this can sell in the gray market, and they're not, and people are buying more. So clearly, the steering committee is not going to take $2 today. What happened to TVs behind you? That is a great question. I am not sitting in my normal spot because I'll show you. That's my poor dog wearing the cone. And that's where I've been sleeping for the last 8 days. The TVs are up there. And I am sitting on the shallow side of the desk because of the mattress that's on the ground. And yeah, like I said, it's been a crazy week. Crazy week. Does YJ turn $8 a share at this point? Not sure how his options are structured. He has plenty of incentive to take 18 or 19 or 20. You know, at the end of the day, it really just comes down to whether or not there's even a buyer for it. You know, the business imploded, and the financing markets are tough, and LX Semicon has gone down huge. So, you know, it remains to be seen if they can get the 18. Now, there were a lot of people looking at this, and the company wanted $27 a share. $20 and $27 are very different when you have $6.50 in net cash. Okay. The enterprise value is dramatically different at 20 versus 27. It makes it much easier to get a deal done. I think that the board is under immense pressure now. And I think there's a decent chance we get a deal done. I know that seems really hard to imagine right now, but I really think so. And we'll just have to wait and see. You know, it's pretty depressing. I'm not going to lie to you. I did not expect to be involved in Magnachip this far into the game. All right. What else? Anything else, guys? How are you guys doing? Huh? Oh, man. What's near-term cap on Twitter price next 30 days? Did you think it could hit 45, but looking like it will? Yeah, this was surprising to me, the way this has played out, Think Blue. I thought that because of the banks, there would be a lid on it. But the market is pricing in more and more every day that this closes at 54.20 or there's a small cut at 52. The major difference between when I spoke last and now is there's now a shareholder vote scheduled for, I think, like September 7th. And as we approach that vote, you'll probably see it firm. It might go as high as the upper 40s, 47, 48. Because the likelihood that they do a deal for 52 or 53 or 51.50, I don't even think it'll be 51.50, is high. And if they don't do that deal, the likelihood that Twitter wins at 54.20 is high. So I think he could grind to 46, 45, 46, probably not higher than 47. Because I'm only in the spreads and not the common, you know, I'm not really bothering myself with it. I'm just gonna let it play out. I'm really bummed I don't own the common anymore, that I got chased out of it, but it happens, you know. Back to the ISU spread. The reason why I like it so much right now, it's actually just narrowed a little bit while I've been talking to you, is the likelihood that a press release comes out where you kills the app deal is high in the next few days. And I don't even know why. Right now, the spread seems to be narrowing pretty aggressively. I don't know what happened, but 33% is way too high of a spread for something like this, right? There's no antitrust risk. There's no. It's crazy to me. So I'm pretty excited about the IS spread. Just for users that don't know, the spread means you short U and you buy IS at some sort of ratio. You could do a dollar for dollar. You can be short more U than IS because IS is worth a lot more. If the deal goes through, there's a lot of different ways to put it on. I basically did it dollar for dollar. The true way you would do it is you would short more U than IS based on what the ratio is. Got a voicemail from a non-robocaller calling me off Twitter board about the show to vote. Never had that happen before, especially since I'm a small retail guy. Board of directors pulling out all stops. That's hilarious because there should be no risk for the vote. Obviously, everybody wants to go through all the shareholders. So I'm really surprised they did that. But there won't be any problem with the vote. Depressed, right, Praven? I know. Look, the only thing that, well, me losing the money in Magnachip is the worst thing. But the second worst thing is because I do these YouTubes, and I never thought I'd ever kind of do anything like this in my life. And none of this is investment advice. I don't get paid for any of this, and I don't move any of these stocks based on talking to you guys about it. I don't like seeing people lose money, and to the extent that I influenced anyone to purchase it, which is on you, not me. That pisses me off. I'm competitive as the next guy in this business. So I hope we have a good conclusion there. But I'll reiterate what I said last time. A sale at $20 is not a good conclusion for me. It will not be a win. Okay, this is taking out all my hair, and I want to move on from Magnachip. The good news is at $12.50, there's less I can lose. And it's perverse, but you want to buy stocks when they're down, not when they're up. So you're never going to buy them when things are looking great most of the time. And that to me would be the opportunity today with Magnachip. So, is there better places for your money? There could be. You have to decide that. And SHLX was great. That was a huge win, guys. I mean, 15.85 plus maybe a second dividend or a third dividend. It was a huge win. There's no other way to put it. What I viewed as extremely low risky, right? All comes down to the risk side. Magnachip had lots of risk. Kohl's had lots of risk. Twitter on a break has lots of risk. But when you get something like SHLX, where the downside or the odds of no deal going through, I thought were virtually zero. You just don't see someone like that very often. So I see it again. I'll jump back on here and tell you, but you just don't see it very often. Anything else, people? All right. I shall see you guys the next time there's something to talk about. I think we are due for some good news, though. I will say SHLX was a big win. I hammered that thing on here. I don't know how many people followed me into it or not, but I made that clear. That was an oversized position, my biggest position, and it worked big. So we got that going for us. If you were to put an AMX spread, what would it be? So that's such a great question, Fat Eddie. Yesterday, I tried to put on some spreads, and I didn't get any filled. And I think that game is over. I really do. You know, if I was going to put in any spreads at MX, I shouldn't be telling you this because I want to do, if I was going to do it, it would be, and if there's, it's sad, it would be Jan 24, 15-20 spreads. And I would want to do those at like $1, or I mean, maybe pay $1.25 or something for them. The Jan 24 15 calls are, I'll tell you why in a minute. The Jan 24 15 calls probably cost you like $2, $2.20, $2, $2.10. And I don't know what you could sell the 20s at. So you can't really put those on for $1.25. You'd have to pay $1.50 probably for them, maybe more. And the reason why I didn't do it is I think Commons is much more attractive. You know, the goal of those spreads would be you capture, of course, a sale, and the sale will close by the time that those expire. So you get the full price of the sale. If it goes for 18, you more than double your money. If it goes for 20, you triple or quadruple your money. And then you also have a really good chance of making money if the business comes back next year. You know, you can get to a $20 stock price if the business ramps in the second half of next year. So I would be pretty conservative or cautious about putting on any spreads other than kind of Jan 24, 15 strikes. But, you know, they're wide as a mile. It's expensive to put them on. So for me, I am going to just stick with my big common position. I will not make the kind of money I was going to be able to make. I was set up to make a lot of money with the spreads I had on, and that's just not going to happen anymore. Even if they sell $20, most of all of them will be worthless. Because I don't even own, I own 1750 calls in Jan, but it'll trade with a spread because of the political risk. So it won't close by January. So those will be mostly worthless too. That's my MX views. All right. It's a pleasure as always, everybody. Take care. Thanks for listening. Thanks for watching. Bye.